Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very good day in the markets and a very beautiful weekend as well. And in today's action, guys, well, the SPY, the QQQ, and most of your major sectors actually ending up in the green. Now, that is in spite of some negative news that we got over the course of the weekend, whereby we saw President Trump announcing tariffs of 30% on Mexico and the European Union, both of those rates being effectively higher than the ones previously announced on April the 2nd. Of course, the tariff deadline for this time is going to be August the 1st. And I hope you guys are ready for a very busy week in the markets. And it all starts off with earnings tomorrow. Tomorrow, we start getting some earnings from the banks, JP Morgan, Citigroup, Wells Fargo, BlackRock, and many more reporting earnings before the bell tomorrow. It continues thereafter with a big earnings report from ASML, semiconductors, guys, starting on the Wednesday session and followed by TSMC on the Thursday session prior to the open there too. And then on Thursday evening, we get a very big company reporting, guys, the first of your big tech names, Netflix. So it should be a very action-packed week in terms of earnings, but not only that, in terms of macroeconomic releases as well. Tomorrow morning before the open, we get CPI, 8:30 a.m. Eastern time, fresh off the press. We will be seeing a possible increase in inflation to 2.7% from the prior recorded one in the month of May of 2.4%. We then continue on Wednesday morning with producer inflation numbers. On Thursday, we get retail sales, and on Friday, we get Michigan Consumer Sentiment Survey, of course. That being said, guys, it's going to be a very action-packed week, everything from earnings to macro releases to following along with further negotiations on the tariffs, which leads to the question, are these markets still a buy, even though the SPY is at the all-time highs right now? Well, the answer is yes. However, it depends what and where. And in today's video, that is going to be what I'm going to try to do the best for you, is determine where exactly should we maybe be rotating the money to. So speaking about today's video, first off, we'll do a full technical analysis rundown of our major market sectors here, determine where is the rotation taking place and where can we possibly take the best advantage of that rotation. Thereafter, we will take a look at our big tech name list into the earnings season, which companies are looking like buys, which ones are holds, and which ones will we possibly need to be a little bit more careful on. At the tail end of the video, I'll be taking you guys through the biggest gainers and losers of the day. Many very interesting gains in the market today. Double-digit percentage points for some of them, like SMR, Oklo, and Rocket Lab. And then I'll take you through the biggest losers of the day, some of the names to the downside, which could be presenting some decent buying opportunities. And to finish the video off, I'll take you guys through my portfolio and a few trades made today and how I am planning on trading the markets this week overall. So it should be a very fun and interesting video, guys. Let's jump right into it, shall we? So the SPY up 0.19, the Q's up 0.36, and overall we did have some fairly good broad market rotation today. Take a look at the heat map. You will see that big tech, bit of a mixed bag. Amazon, Tesla, Google, and Meta to the upside, but Apple, Microsoft, and NVIDIA trailing behind a little bit. Financials looking very good leading into their earnings. But of course, today's green is not going to matter if the banks report poor earnings tomorrow. I'd be surprised if they would, and we'll talk about that when we cover the financial sector in a few moments. Healthcare not performing too poorly today, and the bottom half of the market also not doing too bad, picking up some of the slack that semiconductors were having today over the course of the morning and afternoon. In terms of the one-day relative, you can see that even better to where most of your major sectors indeed were in the green. Energy, basic materials, and technology were indeed to the downside. The impact of technology was largely because we had a pullback day in all the semiconductors. But you remember I was talking about rotation within the sectors. Today, software actually not performing too poorly after being really bad the last few days of trade. Well, we've kind of swapped now from the infrastructure and hardware stocks right there over to some software rotation. So even within the context of a certain sector, you are finding rotation. All things considered, the markets are still looking very healthy in my humble opinion. So in terms of what's on the table for tomorrow, guys, in terms of how it can affect the SPY's performance, of course, we're going to have to talk about inflation, right? Now, you may think that an uptick to 2.7% for the month of June is something bad, and maybe it's related to tariffs. However, in my humble opinion, guys, even if inflation comes in at the 2.7 mark, it's probably not going to be enough to derail any current narratives that we have right now. And the reason is very simple, guys. 1 month is not going to be enough to establish a trend. Keep in mind, in terms of inflation, guys, we have been in a very nice downtrend now, arguably for the last 3 years. That being said, the prior read in May was 2.4%. An uptick to 2.7% is not even going to be higher than the rates that we got in the month of February. So keep that in mind. That is your headline inflation number. Even core, guys, core has been trending nicely to the downside. Previously, it was at 2.8%. So even if we come in marginally higher, it's not going to be enough to establish a trend and probably not going to be enough to result in some panic in the markets overall. You can also take a look at the trueflation gauge right here, whereby, since the end of the month of June, look what's been happening to inflation all throughout the early stages of July. It's been dropping. So as a result, as I was saying, I don't believe tomorrow's number, even if it will come in a bit higher than expected, will be enough to kind of shift the narrative to one of a big worry about inflation. Trueflation here measures about 30 million different items. So keep that in mind as well, right? So that's what we're going to have in terms of tomorrow's price action. Now, in the event that inflation is a negative impact on the market, you will have to look to financials earnings. And the previews for financials earnings, guys, is very simple. There's a few things that have been happening over the course of the most recent quarter. Number one, for financials, we're getting very close to the actual rate cuts. A lot of people anticipate that that will be September and possibly another rate cut in the month of December too. That is going to be good for the guidance in terms of net interest income for the banks. So that could provide some lift to the banks overall. Number two piece of news that will probably positively affect the banks is what the Federal Reserve did just a few short weeks ago. It hasn't been talked about that much, but the Fed actually reduced the liquidity reserve requirements for these banks roughly 3 weeks ago at this current time. That allows them to either buy more assets such as treasuries or equities, or buy back more of their own shares. So obviously when banks have some of their liquidity requirements lifted, it does provide some very bullish catalysts for those businesses overall, which is why I would assume that the bank earnings tomorrow should tentatively be pretty good overall. So maybe if the bank earnings are good and CPI is negative, it might just be a counterbalancing force right there. We'll obviously have to keep a watch on that. But that is kind of your preview that I'm taking a look at for tomorrow. In terms of the price action for the SPY, guys, well, of course, the bulls are in full control, right? It's a very nice daily uptrend right now. Higher lows are set. They barely made a new all-time high. Pay attention, though, guys, to this level right here, 617.62. In the event you drop through that because of inflation and or bad bank earnings, that would be the start of a daily downtrend, and that would start you off into a bit of weekly consolidation. Of course, we have many more factors at play here for the rest of the week, such as the sentiment from the ASML and TSMC, right? Those are going to be very big for the markets because we know semiconductors have been your lead bulls as of recently. If these are very positive earnings releases, the SMH could have another beautiful week of rally, which could really also lead the markets higher. And of course, sentiment around Netflix too is going to be the X factor in terms of direction. So as always, right, we expect the worst, but we hope for the best. I'll give you guys the worst case scenario, which would be a daily downtrend for the week and a bit of weekly consolidation. Wouldn't be that bad overall, guys, because the bulls are in full control of these timeframes right here. Any pullback on the weekly, just looking for a higher low, anything above 592.16. Beautiful participation here by the bulls. And would just be looking for a higher low. And you got a lot of support below here. 609 down to roughly 598. This 10-point pocket would be a nice fallback location for a bit of accumulation before maybe making a second attempt at your new all-time highs. All things considered, guys, the bulls are in absolute full control in terms of most of your short-term timeframes and the medium-term timeframes as well. In terms of your QQQs, the picture is roughly the same. We have a very beautiful daily uptrend right here, with the higher lows being set pretty much at the lows prior established here last week. 550. Pay special attention to that level, guys. If you flush that level, it's a daily downtrend, which could start you into weekly consolidation, provided that everything that can possibly go wrong this week goes wrong. So really bad CPI, really bad earnings from semiconductors and Netflix as well. Well, of course, that's going to drag down the sentiment on the Qs, and you would just be looking at that point for a weekly higher low, but the bulls have a tons of space. Anything above 524 looking for a higher low, and beautiful support below us as well, 537 down to 523. The bulls are in full control of this chart too, and I do still believe that any and all dips would indeed be for buying. Keep in mind, you are in your second best month in terms of yearly performance, guys, which of course is the month of July. The better one though is November, but overall July should be a fairly good month, and I am quite bullish on this earnings season, all things considered. Moving on to XLF right now. So XLF, I mean, I'll do the price action here today, guys, but it's really not going to matter, right? Because earnings for the banks over the next 2 days are going to move this a lot more than just the current price action technical setups. That being said, pay special attention to the lows of today, around 52. If you flush this, of course, it's a daily downtrend, and you'd be going into a bit more weekly consolidation. That being said, financials have a lot of space right now. Beautiful chart by financials, would just be looking for a higher low for possible further trend continuation. A lot of space here, anything above 49.78. is going to be looking for that higher low, and a lot of support. We're currently in it right now, right? 52 down to about 50 bucks. This previous all-time high resistance range is going to be providing a very nice backstop for the bulls for any short-term declines. In terms of how we're looking at the banks here, guys, well, we could be looking for some pullbacks, right? I'm a big fan of buying pullbacks, and if the banks come down after earnings, pay attention here. Bank of America, 43 to 42 could be a very nice buy location in the event of some pullbacks. JP Morgan, the big one, of course, the pullback location would be anything under 263. That could provide us a little bit of a monthly downswing, pick us up, and maybe go for a little bit more. I think the banks are going to have a very good end of the year, especially leading into those rate cuts, obviously. And we can talk about a few more, such as Wells Fargo. Wells Fargo, if we do pull back here in a significant fashion, there's a couple levels that you should pay attention to. 80 is one of them, but in the event we breach 80, the more solid one, in my opinion, would be down here at about 77, 76. That would be a very nice location to possibly pick us up for a bit of a swing trade. So I'll be looking for any and all declines to participate in. The one thing I will not be doing is if the banks do very well, I won't be chasing on any earnings pops overall. I'd rather play other names that have been possibly left behind. And you don't need to look too far, guys, in terms of financials, right? Visa and MasterCard, probably my two favorite plays right now for a little bit of rally recovery here in the financial sector. Moving on to XLV Healthcare. Healthcare down about 0.12%, still doing a whole lot of nothing, right? Just tightening up here, tightening up, but the location is what matters the most. Where are we tightening up, guys? Well, we're in the confines of this entire support range, talking about 136 down to 121. The bulls are trying to get this weekly trend change underway. For that, you would really need to see a break above 137.53. It's a decent location to be accumulating the healthcare sector if that's something that you want to participate in, as we are looking for a tentative monthly upswing. The resistance range to that would be roughly 145 up to about 147. Decent location, guys, to be building up some healthcare plays. As we know, it's been lagging behind the S&P by a fairly wide margin right now. SMH right now down about 0.75% today, but all things considered, guys, there is no loss of any trend right here. It's been a beautiful uptrend for, the past couple of months at this point, right? Looking very solid, just one day of pullback. Anything above 279 is going to be looking for a higher low for possible further trend continuation, tagging perfectly into the 12 EMA. But of course, we know that this week is going to be all about those earnings from ASML and TSMC. Those will set the tone. So in the event we rally, well, that's the expectation and that's the bias. Why? Because the daily bulls are in control and the weekly bulls have never lost control either. It's a very beautiful weekly uptrend right now. However, if we move a bit to the downside after those earnings, just understand the bulls have a lot of space right now, right? Anything above 235 looking for a weekly higher low for possible further trend continuation. And I will be a big fan of buying any consolidation in the semiconductor sector overall. The first line of defense for the bulls would be right around here, around 275, your prior all-time highs. The bigger one, though, if ever the sell-off gets, quite accentuated here, you're going to be looking for 260 down to 250, a back test there. I know it's a wide distance away, but you guys know, semis can move in a very rapid fashion, right? You wouldn't be surprised if those earnings are not well received by the market. If it starts a bit of a cascade effect to the downside, I'll be a very big fan of waiting for some swing trade longs in the lower 260 location, but also looking to play some short puts under the market, either on the ETF or my favorite semiconductor names. Moving on to the Russell right now. The Russell up 0.67% overall today. Not that bad of a day for the Russell, guys, and the daily uptrend on the Russell simply continues at this current time. Looking for the higher lows still, anything above 218, looking for new higher lows for another attempt at the resistance range above us. 232 down to 225 would be that mark. And in the event we just roll over this week, because everything that can go wrong does go wrong, understand who is in control here, guys, right? The weekly charts are looking very good for a weekly higher low. Anything above 207 on a pullback, looking for a higher low for a second attempt at the resistance range on a weekly time frame. And below us, we got a lot of support, guys. 217 down to 208. Beautiful support pocket overall. It's a solid one from all the way back there. Here, you can see a lot of price action in that zone and the EMAs as well. So I would not be opposed to building some swing trades in the event we get some pullbacks for some potential longs overall. Taking a look at some of our minor sectors here, XLP still remains a little bit muted right now. We are pulling back into support though. This is all the way down 80.8 down to 79.7. Nice range of accumulation, guys, above the support range. So not looking too bad at all. We would be looking for some swing trade longs. Fairly interesting, right? However, maybe not on the overall ETF if you don't want to, but some names in consumer defensives are not looking too bad. Walmart from this lower location, guys, talking about 93 down to 90 bucks is the one that's pretty much front and center for me right now. I'll be looking to play some short put opportunities down there. And as a matter of fact, this one was on the top 5 options list from yesterday's video. Taking a look at utilities right now, utilities really looking like it wants to break out, right? Accumulation range above support kind of looks like XLP consumer defensives. We are looking to break a little bit higher right now. Utilities looking very strong in my humble opinion. Real estate is another one that looks pretty good as we move into the rate cutting cycle, reacting beautifully from support 41.4 down to 39. Looking pretty good, guys, for some possible expansion, all things considered. My favorite segment of real estate right now, probably the home builders. We know that they've now reset into a weekly uptrend. We're looking for some higher lows, looking for some expansion. Would not be a bad proposition to build some swing trade positions on the home builders, in my humble opinion. It's looking very good. The monthly MACD is starting to kind of roll over, pointing a little bit to the bulls right now. And this has been a downtrending cycle since the month of pretty much October and September of last year. So it's been about 9-10 months. We've come into some very nice levels here. A 5-year trend line reacting beautifully from horizontal support. You might just be looking for the upswing. But if home builders is something that you're looking to play, the thesis has to be a bit longer than a few weeks, guys. We're talking into 2026. So any longs that are made right now could just find their maximum rewards sometime in early 2026 as the housing market comes back a little bit. Talking about the VIX was actually up 5% today, even if you don't notice it because it's a red candle, right? The VIX is going to have many catalysts to run this week, guys. All the earnings and all of the macro data releases, those are all going to be catalysts in whereby we could see some increases on the VIX if ever some of those are bad. In the event we come into the lower 20s, I think it's going to be a fantastic opportunity to sell some options in the market. Of course, if the VIX is moving higher, that means that your indexes are probably dropping. And as I said, we do have a bullish leaning bias. So if you do see the VIX start pulling up in a rapid fashion here, just take a look at some of your favorite stocks and focus on maybe selling some options, especially put options under the market. Good thing for you guys, I gave you guys a nice video prep yesterday with the top 5 options video, so make sure you check that out as well. All things considered, the VIX is not looking too bad. One day of upswing is obviously not enough to set a trend in motion. Taking a look at yields right now, yields obviously doing a whole lot of nothing. They've been very sticky here, guys, in the whole 4.4 to 4.5% range over the course of the last 3 months. Now, you know, we're probably going to need to get some resolution on the tariffs, more negotiations in play so that this drops. The only reason that yields have been upswinging for the past couple of weeks is because of the new announcements on tariffs. So of course, guys, yields and bonds overall are a trade that can adapt or can adopt many faces, right? Sometimes yields will paint the picture of an economy that's dwindling and thereby require a bit more risk premium as people will want to eventually pile into bonds. Sometimes it's an inflation trade. Sometimes we talk about the bond vigilantes. Sometimes it's related to the dollar and, the fading of US exceptionalism and the risk premium associated to that. So bonds and yields are a very complex topic overall. In my opinion, this one will only start to drop as we get closer and closer to that first rate cut, which tentatively is the September meeting for the Fed, right? And the 20-year yields, kind of the same thing. We're still looking for that decline. I'd be highly surprised if we really skyrocket beyond 5, but we'll take a look at this every single week, of course. The TLT 20-year bonds, guys, still a very decent trade in my opinion, but as I've been saying for the past 2 months, it has to be slowly accumulated because it's not Palantir, right? It's not going to do this. When we start uptrending, meaning when yields start downtrending here, it's going to take a long time for us to actually start, gaining the levels on the bonds to the upside. So be very patient with this trade overall. Now, lastly, taking a look at gold. Gold up 0.18% for the evening, but yesterday they actually ended red, down by about 0.35. Now, gold, all things considered, guys, has been doing absolutely nothing, right? We're just trapped between two ranges right now. 33.80 down to 33.40 is the top end of your resistance range, and bottom end of support down here is 33.11 to 32.50. No swing trades for me on gold right now. It looks as though the bulls want to break out. But if I'm going to be looking for a breakout trade on gold, I'm going to want to see one thing and one thing only: the breakout and retest. Give me a capture of the level. Prove to me that you actually want to take it, and then we can maybe play a retest for some potential future longs. Or conversely, if we're looking to short gold, you would need to capture this level to the downside, backtest, give me the short entry, and then we will take it. Not a big fan of really guessing which way the range is going to break. I'm a big fan of playing the range breaks thereafter once they've happened, right? So that we can be sure of the direction. But overall, gold is not looking too bad. The bias is still long to the upside. They have the weekly uptrend. We are looking for the higher high breakout. But as I said, guys, right? Let them confirm it to you rather than just guessing. So that is my outtake, or that is my take on gold overall. Now moving into Bitcoin. Bitcoin was actually moving higher today, actually clipping into the almost $123,000 mark for Bitcoin. This was a very beautiful breakout. We commented on it on the channel a lot, building some swing trade positions either here and or here as a backtest of support. Clear daily uptrend in motion right now for the bulls, and any move lower looking for a higher low. Anything above 107 looking for a higher low for possible further trend continuation overall. And even if we unwind in a big fashion, guys, you got a lot of support below. It's a beautiful expansion of the weekly uptrend. This was some very beautiful sideways accumulation as well. And now we got the breakout, right? So it stands to argue any consolidation on the weekly, guys, just looking for a higher low as well, right? Anything above 98.5. Looking for a higher low for possible further trend continuation. The backtest level in the event that it gets bad, I'm not too sure if Bitcoin's going to be able to pull back all the way, maybe only to the 12, but we'll see. If they lose this, if they set a daily downtrend, right? Well, then you're going into weekly consolidation right away. The last week's candle, though, is looking pretty strong for some continuation into 125, but to give you the benefit of the doubt, in the event we do pull back, well, we're probably going to be pulling back into the same area that we just broke out of, which largely is between these two yellow lines. 111,500 and 109 is going to be the range that the bulls might be able to backtest a little bit. Bitcoin is looking pretty good, all things considered, and you're starting to see a bit of expansion on the altcoins as well. Ethereum not looking too bad. Nice reset of the weekly uptrend right now. Still have to clear that ever elusive $3,000 psychological level, but Ethereum not looking too bad to play a bit of catch up to Bitcoin. It may take some time though. The next target for Ethereum, of course, is 37 up to about 4K. So that being said, that's all, most of your market rundown. Now let's cover some big tech names, shall we? All right, so first let's take a look at Apple here. Apple down 1.2%, but Apple is not looking too bad, all things considered, guys, right? We had the daily uptrend, which was nice right there. In the event you lose this, as we did break into resistance, but got rejected, 221 down to 211. In the event that you lose this, and today almost was a loss here of the lows, 207. If you break down into a daily downtrend, just understand, guys, you might just be looking to backtest 204. I will be a big fan of playing this drawdown right there. I'll be looking to sell puts under the market as close as possible to 200, as that is also very close to our support range, which starts at about 196 down to 187. We've been making a lot of money on the wheel on the channel playing Apple short puts in this lower location. And the bulls, we know where they're trying to go for right now, looking for the weekly uptrend shift. If they have to gain a little bit more momentum with a downswing here before trying to crack above resistance, I would be a big fan of playing short puts, but also going for a little bit of swing trade longs. You might remember the last time I played some swing trade longs was into support, but now I'll be looking to double dip. If we get that breakdown here into the lower 200s, I might just be firing off some more swing trades on Apple to make an attempt here for that resistance high. Keep in mind, Apple on a year-to-date basis is still down 16.7%, so it could be a very interesting catch-up trade, all things considered. Moving on to AMD right now, AMD down 0.12%, but really on the cusp of the resistance range right now, yeah? So 153 down to 145 is that whole resistance range. The bulls are looking pretty good. We saw a bit of consolidation over the course of the past 2 weeks. Daily downtrend, which we knew was just a attempt for a weekly higher low, right? This this time frame right here, the weekly time frame, is the clearest in my opinion for AMD, and the bulls are looking really strong to kind of go for it. Of course, a lot of the sentiment on this stock is going to be impacted by the results of ASML and TSMC, so keep that in mind. If those two earnings are good, I would not be surprised to see AMD break through the entire resistance range. And I mean, they do have the fundamental numbers to do it, guys. Fundamentals on AMD are still very cheap in around the 140 range. Forward PEG ratio of 1.2, which is quite cheap. And I will remind you, AMD is currently coming into some of its best quarters in the next few years, guys, right? Look at this EPS expansion rate and look at the revenue expansion rate as well. So in my opinion, it's not too late yet. Of course, the best thing would be to be able to buy it back down there in the support range, 132 to 120. But even here, guys, building some positions on AMD in this whole range from 146 and through consolidation to 130, not a bad proposition, and I would not believe that you are too late to this trade at all. Moving on to Amazon right now, Amazon up 0.3%, just grinding higher, trying to break through the resistance range. 228 down to about 217 is this whole resistance range. You would really like to see Amazon, claim the resistance range and then be able to backtest it as support. That would be a nice swing trade opportunity, in my humble opinion. In the event we get rejected from here, and break below 219, that would unfortunately open up the door for the backtest and lower low for the daily downtrend. If that does happen, guys, I'll be a big fan of buying the dips on Amazon because the long-term bulls control this time frame. Weekly uptrend is clear as day, in my opinion. You'd just be looking for a higher low on the weekly, anything above 207. And I'd be targeting this 12 EMA, the 12 and 26. If we can come down in the lower 210s, like 212 down to 207, that would possibly be another swing trade long area for me, but also be able to write some short puts under the market. I'm going to be very bullish on Amazon earnings, which are coming up in just 2 short weeks' time, Thursday, the 31st of July. So keep that in mind. Amazon's still one of my favorite plays. And no, I do not believe it's too late to start long-term portfolio positions either. I think Amazon, in spite of their valuation right now that is clipping into the lower range of the 30s in terms of forward price to earnings, guys, I think Amazon is still a buy because they will be expanding EPS, free cash flow, and look at the revenue ramp of Amazon over the course of the next couple of years. In 2028, they'll be making over $900 billion in revenue across their different lines of business. Still one of my favorite companies in the market overall and my largest position. Moving on to Google right now. Google up 0.83. Google, not looking too bad. Coming alive finally, right? They were struggling a little bit in the past 2 weeks. Finally getting the daily uptrend break right now. So now the bulls creating a lot of space off these lows, 174 to be exact, coming into resistance right now, 183 up to 191. So if we get rejected here, they got a lot of space, guys. Anything above 174 looking for a higher low for possible further trend continuation. Where could we come down into? Well, probably the top end of these guys before the bulls play a bit of defense. And the 12 EMA is there as well, right? Talking about 180 down to 178. It's very close, but that's the closest area that we have. Looking to smash through the resistance range. Google is still very undervalued in my opinion, even here at 182. Sure, you might complain that you're not buying the lows, but overall, guys, you have to look objectively at the numbers, right? And the numbers do say that even at 182, the stock is significantly undervalued in my humble opinion. It does represent some very good risk to reward, and your longer term bulls are indeed still in full control of this chart. So I'll be looking for more Google expansion and a break above the resistance highs, right? No swing trades from me now. My swing trades were all taken there. The next batch of swing trades, you would either have to wait for one of two things: consolidation, which opens up further longs, or the good old breakout retest of the support range. Let the bulls prove it to us that they want to break above a level, back test it like right here to provide some more entries, and then go for the continuation longs. Keep that in mind. Moving on to Meta right now. Meta up 0.48%, but Meta's just been doing a whole bunch of nothing, right? Sideways consolidation, but where? Above the most recent area of consolidation as well. 704 down to 682 is going to be that consolidation range. Meta is not looking too bad, all things considered, guys, but if we do break down below Friday's low, 710, it would be a daily downtrend, and we'd be looking to these bulls to play a little bit of defense. All things considered, though, Meta is looking quite attractive on the weekly timeframes. It is a beautiful weekly uptrend, so curious to see how good of a defensive stance the bulls will be able to take if we do pull back into that range overall. No swing trades from me on Meta right now. Not the worst opportunity in my mind to be adding some Meta shares up here, especially if your time horizon is more so than the next few days, right? Talking about the next few years, Meta is going to be performing fairly well in my opinion. The valuation is still manageable. Notice how I didn't say cheap nor expensive. It is still manageable, all things considered. Fantastic net margins for the company and expansion of the business over the next few years should be very good. Very clean ramp in EPS and very clean ramp in revenue as well. Moving on to Microsoft right now. So Microsoft down about 0.06%. Microsoft has earnings in 2 weeks' time. They have never lost the daily uptrend, guys, this entire time. What a rally on Microsoft since their earnings last quarter. It's only been straight up at this current rate. However, if their earnings do not provide the numbers to give them extra lift, meaning their earnings have to be very exceptional this time around, guys. You're talking about a, bottom to top rally right now of 40%. And Microsoft is not Palantir, right? It's a very defensive or a very, well, in terms of tech, right? It's more a defensive company, more value-oriented play, even though they're growing a lot of segments of their business well. That being said, in the event that leading into big tech earnings or whatnot, we get some declines because obviously right now the bias is still to the upside. We are overbought conditions though on the daily. We have been now for about a month. We are overbought conditions on the weekly. So I have to give you guys the downside expectations, right? In the event that you lose this 12 EMA, which the bulls have been holding this entire time since the last quarterly earnings, in the event you lose that and set the daily downtrend, what is the expectation? Well, of course, it's just going to be for a higher low on the weeklies, guys. Beautiful uptrend, looking for a higher low. The more logical area of pullback, in my opinion, is the prior all-time highs and the 12 EMA, which is sitting at about 467. Microsoft, for me right now, is not a buy. It's at the top end of its valuation range, but it's also not a sell. This one would just be a hold from me. There is nothing wrong with Microsoft's business. However, there are better times than others to be buying this company, and now, in my opinion, is not the one that provides the best risk to reward. That being said, fundamentals of the business, I mean, it's Microsoft at the end of the day. It's going to be looking very good into the next few years. So any pullbacks, in my opinion, will be a very nice buying opportunity. On to Netflix right now. So Netflix, guys, I mean, there's not too much to say, right? Netflix's earnings on Thursday. So that being said, the expected move for Netflix, we can have a look here. It's probably going to be still about 7%, but just so you guys understand what it actually is, it's actually about 6% right now. So regardless of what the price action does over the next few days of trade, it's going to be up 6% or down 6%, which could take us to one or the other important levels here. So one important level is going to be to the upside here. All-time highs, 1337. That's about 6% from here. The other important level is 6% to the downside. You would clear the support range 1214 down to 1185, right? So I'll give you guys both case scenarios right now. Netflix, the cleanest time frame in my opinion is the weekly time frame. The bulls are looking for a higher low. If you get a 6-7% move to the downside after earnings, you will lose the weekly uptrend. You open up the door for a weekly downtrend or just one leg of weekly consolidation. Big consolidation and a loss of the weekly uptrend is synonymous with a higher time frame period of consolidation, guys. The monthly time frame has ran an absolute ton. It's overbought conditions right now. I would not be surprised if earnings are bad. The bulls just take some time to consolidate and maybe wait for the 12 EMA to catch up right there. It would not look too awkward. And the next target, if we do blast below that, would probably be this one right below here, right? 1050 up to about $1,100. This little pocket right there. I know it's not very clean, but it's the closest one that you have. And of course, if Netflix blows it out of the water, all things considered, well, we just might be looking to new all-time highs. No swing trades from me on Netflix right now. I'd rather wait for earnings to give me a clearer indication of direction. I will be looking to play any significant pullbacks if we get them, though. The valuation for some long-term shares is quite expensive, so I'm not adding any Netflix, but I'm holding all the shares that I do have. On to NVIDIA right now. NVIDIA down about 0.52%. Not the worst day for NVIDIA, but one day of consolidation nevertheless. So daily uptrend is still in motion right now. Your higher lows are right here, 151.32. Even if we do pull back as a result of maybe some, unfavorable earnings from ASML or TSMC, you're just going to be looking for a higher low, and the bulls have tons of space. Be careful, though. If we pull back too much into those higher lows, you open up the door for a daily downtrend, and you do open up the door as well for some very healthy, and keyword healthy, weekly consolidation. The closest area of consolidation that you could possibly fall back into would be 150 down to about 145. The bulls are in complete control of this chart, and a move down like this would not look so awkward, all things considered. It's your prior all-time highs. The 12 EMA on the weekly is right there as well. Now, NVIDIA is not terrible, guys, in terms of forward valuation. At about 164, you're probably looking at a mid 30s forward price to earnings, about a 1.6 peg overall. The price to sales is quite high, yes, but you know, it's not a bad proposition to be buying it up here, guys. It's just not ideal, right? At the end of the day, you are chasing overall. It's a very greedy trade, in my opinion, if we're buying NVIDIA up here, but you guys are free to do what you want. I'll be waiting for some pullbacks to possibly look for some swing trade longs into the support range. And also, I'll be looking to sell some puts under the market if we get a few big days of red volatility in the next few weeks. On to Tesla right now. Tesla up about 1.08%. Their earnings are coming up next week, next Wednesday to be exact. That being said, before Tesla's earnings, I really don't expect any major breaches of important levels. To the upside, that would be 360 to 340, big resistance range. And to the downside, it's this whole support range, right? 300 down to 261. If anything, I think the bulls and the bears will just benefit, or rather just take advantage of the next 2 weeks before earnings to kind of consolidate, right? A lot of emphasis is going to be on the EPS and net margins of the business on earnings because of the fact that we've just lost regulatory credits in two different ways. Number one, the EV credits for consumers, $7,500 for a purchase of a new EV. Unfortunately, those are out the window as well. We are also losing some regulatory credits from other companies that have notoriously paid Tesla for the past 4 years at this point. It's been a big source of revenue for them. And without that revenue, I'm curious to see what is going to be the guidance here for margin and EPS impact and free cash flow impact as well. So I think we might just stay muted. I'm not taking any trades on Tesla prior to that, right? It's probably just going to result in a tightening range until those earnings. And then earnings, the expected move on Tesla is going to be 10%. If they're really good earnings, then maybe we can test the top end of resistance. If they're really bad earnings, then maybe we'll have to talk about how we can position at some of these support lows. Moving on to Palantir right now. Palantir, brand new all-time high. 5% day on Palantir, looking very good, right? Prior, we were commenting on the fact that this was a loss of the daily uptrend, and we were looking to play some short puts in this range down there, 125 to 120 with the volatility. The loss of the daily uptrend, guys, was not that bad. And the key was the weekly timeframes right there. It's a very beautiful weekly uptrend on Palantir. They got the higher lows with that consolidation. Now higher lows are 128. So now that we have the big engulfing move, any move lower, guys, just looking for a higher low. Anything above 129, looking for a higher low to reset the daily uptrend for the bulls. And even if we lose and go into a daily downtrend right there, well, you're just going to be looking for a weekly higher low. Palantir is still looking very good right now, guys. However, for me personally, it's kind of impossible to buy it up here. I would have taken some swing trades on a pullback to 125, 120. It didn't exactly clip into there, guys. But 150 is kind of where I draw the line. I am a Palantir shareholder myself with a very low cost basis. I like this company. I love what they're doing. I love their products. But at a certain point, we got to talk about risk to reward, guys. And the valuation right now is not the best in terms of risk to reward, all things considered. But congratulations to all the bulls out there. Brand new all-time highs, just very tough to start any swing trades. Any longs made up here, guys, in my opinion, are very, very greedy. And that's just not the way that I do things on the channel. Moving on to SOFI right now. SOFI up 0.61%. A very decent day for SOFI. They started off with a nice period of consolidation, but not quite being able to consolidate a little bit more. Why we're looking for that, guys, is we're looking for new swing trade opportunities. Give me a test of the 12 EMA, or just give me a back test of a larger support range, and I'd be a big fan of playing the SOFI pullbacks. If not, I'll just ride the long-term shares that I accumulated this entire period of accumulation, guys. It's fine by me if they continue to run, right? But I'm not going to take some greedy longs up here. Even though the valuation is not so egregious, guys, we are big-time daily overbought conditions at about 84 on the daily and coming into a bit of overbought conditions on the weekly timeframes. That being said, if we keep going higher, the next line of defense for the bears will be $24 to $25. The all-time high, almost all-time high areas established earlier in 2021. Any pullback, in my opinion, would be a decent opportunity for some swing trade longs. You'd be looking for some pullbacks, anything above 1730, right? Looking for a higher low for possible further trend continuation. SOFI has some good volatility recently, so a quick and sharp pullback could provide some entry locations for some short puts, selling some puts under here. 17 to 18 bucks is that new range right there. And in the event we roll over the trend and get the daily downtrend, guys, just understand who's in control of this chart right here. It is, of course, the weekly bulls. Beautiful, beautiful upswing by SOFI right now. You would just be looking for a higher low at this point, anything above 13. Can you imagine? anything above 13, looking for a higher low for possible further trend continuation. So if we get a sharp pullback, you will see me playing this recent area of support below. Moving on to Uber right now. Uber down about 1.57%. The bulls are still in control here, right? We tried to get the breakout to the $100 psychological mark, not quite getting it done. Now pulling back a little bit, still looking for the higher low, anything above 90, looking for a higher low for possible further trend continuation. Coming into the prior highs right now, right? Around $93. I'm still not playing Uber up here. I think it's a little bit too rich for my liking. However, in the event we roll this over and breach and set the daily downtrend and go into weekly consolidation, that I will play, right? The weekly time frame holds all the keys for Uber right now. It's a gorgeous weekly uptrend, and any significant move lower would be looking for a higher low. Anything above 82, looking for a higher low for further trend continuation. If we pull down into the 12 EMA, talking about the mid to high 80s, I'll be looking to play some of the lower 80 strikes for some short puts, looking to farm premium in the markets right now. At $93 as Uber a buy for a long-term portfolio, well, it's kind of greedy, not going to lie. I started I mean, I've had positions on Uber since the IPO days, but the more recent times that I've added to this position were in the $70 to $60 range. That is when it was a no-brainer buy. Now it's a little bit challenging. The valuation is a little bit higher, so I won't be buying any more long-term shares here. But in the event we consolidate there, if you do have an Uber position that you're looking to DCA into, anything below 90, especially towards the mid-80s, is not that bad of a bet. On to TSM now. Lastly, TSM down about 0.75. Not the worst day for TSM, but of course, they have earnings, guys, coming up on the Thursday session. So short-term price action might be a little bit choppy leading into earnings. If you take a look at the expected move here for earnings, to be specific, we're going to be looking at an expected move of about 4.2%. So it should not be that volatile. However, 4.2%, let's just say we're in or around here by the time earnings comes around, right? 4% to the downside, you would be setting up for a daily downtrend, possibly into some much needed healthy weekly consolidation. The bulls are in full control right now of this chart, right? And you just be looking for a higher low. At this point, the range, if we get a sharp pullback after earnings, guys, the range I'll be looking to play some short puts on TSM, or if we actually pull down into it, right? Two locations. Now, 210 down to 200. These locations right here, guys, in my opinion, are perfect for selling puts, as the valuation of the stock is not too commanding right now. But also, if we revisit this location with a very sharp decline, which results in some oversold conditions on our lower time frames, such as the 4-hour charts, I will be looking to build more swing trade longs on TSM down there. And of course, 4% to the upside would just put you at brand new all-time highs. Now, is TSM a buy after earnings at the all-time highs, right? It would be very greedy just in terms of the breakout pattern of the chart. But all things considered, guys, the valuation is not so bad. We will redo the valuation after their earnings on Thursday. I'll cover them on the channel, of course. But, you know, in around the 220 range, it's actually not that bad. This is one of the only stocks at all-time highs right now that has a valuation that is actually not so commanding overall. Still one of my favorite semiconductor players across the board for the expansion of the business in the next 2, 3, 4 years. That being said, that's everything I had for you guys for the market rundown. Now let's jump into our biggest gainers and losers list. And we're going to start it off, as we always do, with the biggest losers of the day. So first off, we're going to take a look at ALAB. So ALAB was making an attempt for the breakout of the range, couldn't quite get it. As a matter of fact, not the worst opportunity to sell some puts under the market. I would like to be down below here, close to the 200 daily EMA, which is in the lower 80s. Not a bad proposition for some swing trade longs either, but the stop loss would have to be placed below the lows, right? 84, and then you're targeting the breakout of the highs, of course, at around 103. So all things considered, not that bad in terms of risk to reward. This would be take profit number 1, and then take profit number 2, you would be targeting these highs right there at about 111. Not that bad if you're looking for a bit of a breakout of the range pattern, looking to establish some longs in the lower end of the range, and play the breakout of this name that is indeed in a favorable sector. Micron down 4.75% today. Daily downtrend is started right now, which means we're just into some very healthy weekly consolidation. Their earnings were fantastic. We covered them on the channel in the month of June, and you would just be looking for a weekly higher low. I'm a big fan if Micron drops a little bit more, selling some puts in this lower location, talking about 110 down to 100. Micron is still one of my favorite stocks for some expansion over the next 2-3 years. And I will remind you, I do have some leap call contracts that I've built down here, and I'm still not selling. My time horizon for those is some expansion into 2026 as well. On to Elf Beauty. So Elf Beauty, we were talking about this one in the top 5 options video yesterday. It came into resistance, right? Talking about 140 down to 130, and now just looking for a very healthy weekly higher low. I mean, what can you expect, guys? The stock was up, what? 160% in just one single quarter. So of course we're going to have some pullback. That being said, support is currently established 104 to 87, and I am starting to play some short puts in this location, looking to farm some premium at a beautiful support range overall on Elf Beauty. And if they assign me, I wouldn't even mind riding the shares a little bit higher, going for some expansion. That being said, it is also a reload area for anybody that is looking for some swing trade longs. Building some long-term shares in this location is not the worst proposition in my opinion. Decker's Outdoor Brands, got to pay attention to this one, guys. Down here, support 95 down to 82. I've also been bringing this one up on the top 5 options place. I think it's a beautiful location to be playing some short puts under the market, or maybe even building some swing trade long positions in or around the $100 range. The valuation is not that commanding at all, and their brands have actually been performing very, very well over the most recent few quarters. The reason that they had this second decline, well, as a matter of fact, and the first decline was, of course, tariffs. But I think most of the tariff damage has already been done to the company, and now we are presented with a very nice opportunity for some potential longs. So those are just a few of the names that I wanted to cover to the downside today. In terms of the names to the upside, SMR. We've been talking about this one now, guys, for a few prior weeks. We were saying that it was a very nice opportunity to be building some swing trade longs in this area, back testing our support area almost perfectly, right? It was a very casual trade to be had. If the long attempts were made there, the stop loss was below there into support, and you were looking for some expansion to these psychological levels 45 and 50. So congratulations to everybody who was able to take some swing trade longs on SMR. Looking very good for some expansion right now. The sector is, of course, in favor, and that is in spite of the fact that many of these modular nuclear reactor companies are not going to have any significant revenues before 2027 and 2028. So it's running on sentiment and hype alone, but that's okay. Sometimes we know that those trades can be very profitable ones overall. If we are contemplating starting some swing trade longs here, I think it's very, very greedy, guys, overall. If you missed it, you missed it. It is what it is. But if you still wanted to try your hand at it, guys, I mean, it's not my style of trade, but the next exit would indeed, as I said, be 45 or all the way up to 50 psychological. Moving on to Oklo as well. Same space. Oklo was actually a more obvious trade, pulled back perfectly into our support range overall. I was talking about this one a lot on the channel the last 2 weeks. If the entry longs were here, the stop loss was below support at about 45, and you would be targeting the weekly highs, talking about the higher area of the $70 mark. Looking very good for some possible expansion on this one. So congratulations if you were able to get an entry. If you are contemplating starting an entry now, a little bit greedy in my opinion, guys. For that, you maybe want to wait for a bit of a pullback. A pullback could be a decent opportunity, as now the bulls have shown us that they want to participate. And we do have a curling over of the MACD on the daily time frame as well. That was kind of a downswing started in the early phases of June. Rocket Lab, 10.7% to the upside, guys. Fantastic entry. We were talking about this one the past 2 weeks on the channel as well. That being said, there was not really a criteria for an entry. This was for people who built some swing trade longs in this position. And I was saying that because of the price action of the chart, there was no reason to sell. But any new longs here would indeed be extremely greedy. But as I always say on the channel too, sometimes greedy longs do work. You just have to understand that that is the thesis that you're going for here. If you're buying Rocket Lab here, you have to tell yourself, well, listen, I know I'm late, but I'm going for the greedy long overall. At that point, you're just going to go with the daily stop loss levels, your daily higher lows. The higher lows is now set at 33.54. So any long started there would be acting with the stop loss there and targeting some psychological levels of expansion, of course, talking about 45 into 50. Congratulations to all Rocket Lab shareholders. Very, very strong move by the company overall, but very, very tough to start a position after this move right there. If anything, you'd be looking for another leg of consolidation. If you do get consolidation into 38, let's say, a reversal of this entire move. And don't say it can't happen, guys. It can happen, right? It moves in waves, so just keep that in mind. The stop would once again go below 33 for a possible entry. And then again, as I said, you'd be charting the upside longs, 45 and 50 psychological. Circle also not that bad. You see this big green hour on the chart, guys. We were talking about it last week to where I was saying maybe not the worst opportunity, guys. for a swing trade long, right? So that being said, the stop loss would have been 171.24, looking for the daily uptrend reversal by the bulls. We knew that it was in weekly consolidation after the IPO, and now might just be looking to start to gain some levels. The next take profit for you guys that were able to get some swing trades in back then is going to be coming up into the 220 highs, these guys right there to be specific. And then, of course, got to go with psychological numbers. Some of the highs up here at 250. Circle, not that bad of a bet, guys. You know that stable coins are going to be front and center in terms of the narrative here for probably the next 3-6+ months. Not the worst time to be accumulating some Circle shares, even if we lose this temporary price action, guys. If your thesis is that you just want to participate in the stable coin narrative, well, it's not a bad proposition to be building some positions here, 200 and all the way down into 150 for a long-term accumulation zone. But for you guys that are short-term swing trading this one and that got a beautiful entry, very nice. You can move up your stop to pretty much what it was at the lows of the Friday session. HIMS with an 8.64% day. We are now coming into a very big resistance area, guys. Very big zone, right? 51 up to 55. They need to recapture this zone, guys, right? It's a nice daily uptrend attempt, but give me the final push, and then we can use it as support to establish some more swing trade longs. If you get the good old breakout, retest of support, then we could put a stop loss below there and go for some swing trade longs into the highs, talking about 65. That is a type of swing trade that I would be looking to do. And obviously, if you get the breakdown the other way and just get rejected from here and break down once again, you guys know what I've been doing on this one in the past few weeks. I'll be looking to write some short puts down there in the lower $40 range. MP Materials still looking very strong after their contract. After the DOD invested $400 million into a publicly traded company, something that's never been done before, looking pretty good now, guys. But we are, all things considered, at the top end of the valuation and also at the top end of the technical range. So this, if anybody was holding from prior, it would be a decent area to possibly book some profits and maybe wait for some possible declines to provide some new entries on the stock. I'm not starting any positions up here. Any positions that you would start up here, you have to have a very long-term thesis, guys. Talking about the next 3 to 5 years for you to be able to justify a decent compound annual growth rate, right? Moving into AppLovin. AppLovin is one of my favorite swing trades right now, guys. It's been doing a whole lot of nothing into support, 350 down to 308. It's a beautiful area of consolidation, guys. It is looking for a weekly higher low, and we may have just found it right now. The bull's looking poised for a bit of a breakout. If we had to set a stop loss, it would be below the support range, which would be 303, and then you would be targeting the highs, 425. So not that bad of a risk-reward trade-off, in my opinion, right there, for some call debit spreads, for some shares, and anything of that nature. The valuation of AppLovin, not too bad. It is looking very good for some expansion over the next few years in terms of their EPS. Right? Look at this EPS expansion and revenue expansion as well. AppLovin was a very favorable company back here, but we have not been getting that same amount of lift recently. We got the tariff pause lift, and then now for the last month and a half, we've been doing nothing, just looking for a higher low and maybe for some trend expansion. So not a bad proposition in my humble opinion for this one, guys. And the last few ones that we're going to talk about here is CoreWeave. So CoreWeave, my favorite way of playing this one, guys, since we are in the context of a daily downtrend and in the context of weekly consolidation, rather than trying to guess where this one is going to bottom out, you have to wait for the bulls to show you. And the only way that they will show you is by getting a nice bounce here from some of the lows. We need to wait for the bulls to give us a 50% bounce or more in relation to our most recent lower high. Give me a good bounce, reset the daily uptrend, and once we have recaptured the daily uptrend, you can say your weekly low is set, and the bulls might just be looking for a little bit more. However, until that time, whereby we find a new daily uptrend, I will be looking to play some short puts under the market, benefiting from any big red days. I'll be looking to play the volatility, trying to sell puts in the market as low as I can possibly get. And you can get some very decent strike prices, guys, right? On another 5% decline day, take a look down here at the 110 to 100 levels for weekly options or 2-week options. You can probably find some very attractive premium down there to sell some puts in the open market. A couple more and then we're done pretty much. Shopify, guys, not looking too bad, guys. Shopify, same thing as AppLovin. Consolidation above our most recent area of support right there. We are looking for a possible breakout pattern for this stock, looking very good for some motion to the upside right now. The weekly bulls are in full control of this time frame as well. Just gaining a little bit of momentum right now and going for the upside break. If you do want to take a breakout trade, the stop loss, of course, would be below these low. It's a very tight stop, guys, below 109, yeah? And then your take profit is all the way up here, 129. Very attractive risk to reward. The stop is there because if we lose this, you lose support, you set the daily downtrend, and you might just be looking to target the lower bound of support down here, 106 to 100, which would be the next area to kind of reset those trades. But all things considered, not looking too bad. And another one that I want to take a look at, guys, is Fortinet. Almost the exact same trade setup right now, reacting perfectly from our support range in the last few days, 101 down to 98. Not that bad of a proposition to take some swing trade long. Stop loss will go below 98, and then your targets are 108 and then 115 respectively. So some decent risk to reward on this stock, in my humble opinion. It's been consolidating in this range for how long now? Since the month of May, and the bulls have refused to give it back. Looking good, right? It's just a sideways accumulation. Very long and extended bull flag, looking for some possible appreciation. Fundamentals of the company are looking pretty good right now. So all things considered, I would not be surprised if Fortinet does get the breakout. In the event that this one comes a bit lower though, if you don't want to take a swing trade and you want to wait to sell some options, if you get the breakdown, I'll be looking to sell some puts down here, guys. $95 to $90 range is the area that I will be targeting overall. And that's pretty much everything that I want to cover, guys. Obviously, we can do many more, but there's only so much time in these videos. I'll do my best to cover as many as possible on a daily basis, so that way we can rotate different plays and different ideas in a lot of these different videos, right? That being said, that's all I had for you guys today. Hopefully you enjoyed today's video. Sorry for the late upload, guys. Had a lot of things to take care of today after the market closed. I wish I could have filmed earlier, but better late than never, I assume. The rest of the videos this week will be posted very early, normal schedule, about probably a bit earlier than normal, guys. Probably around 6 p.m. Eastern at the latest. I'll be uploading throughout the week. So hopefully you enjoyed today's video. If you did, consider dropping me a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. And lastly, if you have any questions, always feel free to leave them down below in the comments. All things considered, guys. Oh, sorry, I didn't even show you the trades. So some of the new trades here today, guys. My bad. Where are my manners? So some of the trades we made today, you might remember Walmart. We opened that short put on the Thursday session. We got 52 cents for it. We closed it for 50% profit today. Why? Well, just we rotated the capital to an Elf Beauty. Elf Beauty, this was top 5 options plays video yesterday. 99 strike for 50 cents. Very decent, 0.5% into support overall. CoreWeave, the 110s that I got last week on Thursday, 70 cents. We closed these for 50% profit. I opened up some capital for some earnings trades, which I'll show you in a few minutes here. SOXL was a new trade as well. Short put once again, 22 strike on the big decline this morning, 16 cents. That is now deeply in profit. I'll show you that in a few short moments. And the other one, Rocket Mortgage, was one that we got last week as well. That one is moving well. All things considered, guys, this is what the portfolio is looking like today. You can see these trades. We still got the big CoreWeave trade that I explained last Friday. If you don't know what it is, make sure to check that video out at tail end of the video. Here are the Elf Beauties. We're currently profitable on them. We have the Rocket Mortgage short puts, which are also right now profitable on. We have the SOXLs. We sniped the bottom of those pretty much this morning, guys. They're currently 50% profitable. And then we have some earnings trades. I took State Street, okay? And I also took Wells Fargo. 2 earnings plays, and I'll show you guys how I play earnings with the wheel. You might remember if you've been a long-time viewer on the channel, but if you're not, I'll show you how I play earnings trades, right? Wells Fargo is a 77.5 strike for Friday for 19 cents, right? But we also have another one, State Street, $100 strike, July 18th for 27 cents. I always take the expected move for the week, I multiply it by 2, and then I try to do that strike price. It is a 2 standard deviations trade, right? So meaning that I'm putting most of the odds in my favor of that level not being tested essentially. And overall, guys, what I also want to do is line up 2 standard deviations with a support range. So as State Street right now, you can see this is the support range, $100 strike. That is 2 standard deviations from the expected move. I'm giving myself a lot of space, right, for that trade. And as well, I am into an area of support. Wells Fargo, same concept, right? My 77.50 strike is right around the biggest area of support that we've had recently, and is also 2 standard deviations from the expected move, right? It's 2 times the expected move. So I do play earnings sometimes, even though I tell you guys not to do it. There's a way to do it, and this is the way that I do it in the safest manner overall. No new swing trade longs from me today. I'm pretty much full up in terms of the debit spreads and the lead calls that I've shown you guys throughout the past many weeks since I've built them. So now it's just a question of holding. Decent day of performance for us in the markets overall. Now, that being said, that is all the trades that I had to show you guys today. In the event that you guys wanted to trade with me and be a part of our trading and investing community where we trade the markets every day, but also build very high quality long-term portfolios too, because I'm a big fan of those, you might consider joining our trading group. And the link to that group is down below in the video description. Of course, you get access to all my trades in real time. Here's just a lot of the trades that we've been making over the course of the last, I don't know, 2 months or something like that. All the green check marks are the wins, the red little circles are the losses overall. You get access to all those trades, whether it's the wheel trades, the directional trades like call debit spreads, leap call options, swing trades with shares, and everything in between. You get access to all of those. You get access to our private morning live streams Monday to Friday, where I trade the markets live for 2-3 hours at the open and take all your questions on your stocks, your options, and your long-term portfolios. If you're not there, they're always recorded, so feel free to watch back. You can ask me all your questions in our chat rooms all throughout the day, and I'm very fast to answer. You get access to our educational section, technical analysis, fundamental analysis, how to grow small, medium, large portfolios, trading strategies for options, all things considered. Our members have find tremendous value in this educational section, many of which topics I don't talk too much about on YouTube. And additionally, you get access to all my watch lists. You can copy paste all my watch lists and all my charts as well. Whenever you see, technical analysis like support resistance boxes or fundamental analysis like this that I do every single quarter with earnings, you can just copy paste all my watch lists, all my charts. It makes your life a little bit easier. So if ever you're interested, the link is always down below in the video description. Hopefully I see you guys in there soon. And if not, I'll see you right back here on the channel, guys. That's it for me. Have a great Tuesday trading, and I'll see you guys tomorrow. Peace.